This video is going to be real stupid. It's going to be me again, Nick Sean, going over how I'm doing the same damn thing that I always do, which is trade support resistance. I'm slightly tweaking the risk structure now because I figured out something interesting. Check it out. Most of the time I take a losing streak, it's because the market just rips in one direction. I get into a sell and it's like F you, and it just keeps going. Just like GJ did like the past 2 weeks. It just keeps ripping up, right? So my system dictates that all I do is support and resistance. If you guys want to follow my trades, you click the first link in the description. It's my free Mission FX trading channel thing on Telegram. I literally just share all my trades, analysis, everything in here for free. And I've been doing it for the past 5 years. It's the first link in the description. You can just see this shit on a daily basis. But let me give you the rundown here. Because if YouTube recommended that you watch this video for whatever the hell they think you should watch the video for, you may not know the way I trade. It's super simple. Price bounces around, it goes up and down, comes to support resistance levels, and sometimes it bounces, and sometimes it comes to support levels and bounces. Sometimes it goes to resistance levels and breaks and retests, and sometimes it breaks support levels and retests and bounces. But price just bounces around from support and resistance, and it just does it over and over. And sometimes it breaks and sometimes it bounces. It's like a 50-50 chance it's going to bounce or break. So what I've done for a while now, for the past year and a half, is I've done a system where it's just essentially sell at resistance, and if I'm wrong, I'll hedge, I'll get into a buy, and then price comes back to the zone, and then I'll either add a buy right here at the zone, or I'll just close the sell at a break even, and then I'll keep a pending sell order down there, a sell stop in case it ends up crashing back to the zone. And then if price ends up bouncing up, well, then the buy will go into profit. I'll make a profit on the buy, and then I had a break even on the sell, even though I was completely wrong about the initial trade. Now, a couple interesting things happen here that I've noticed is that if I'm using hedging with this, let's say price goes to the next zone. So I enter a sell at a resistance zone and price ends up ripping up. It just goes to the next support resistance zone. Let's say this was like another clear zone up here. So typically what I do is I'd close the buy at that support resistance zone, and then I would add a sell. And then what I try to do is when price comes halfway in between both sells, since they're the same lot size, I could break even on the sells, having made profits on the buys. Here's the caveat here with this. There's something you may have noticed is as soon as you add this next puppy up here, this sell, if it breaks above the resistance zone, when you look at the risk, if the invalidation from here to here is like, what's that, 200 pips? Let's say it's the same damn thing for here. It's about 200 pips. It's just 200 pips above the entry. If price moves up there, well, you have another layer of risk from here from the 200 pips to draw down there. We'll call that 1 unit of risk. Let's just say it's $1,000 we're risking on this trade. And you have the original unit of risk before you got hedged down here, and that was about 1,000 as well. Plus, not only do you have that original unit of risk and this unit of risk right here, but you also have an additional unit of risk from that position going further, another 200 pips. So now this first position has gone 200 pips before it was hedged. When it came up here again, it went another 200 pips past it, and this third one up here was past. So now, here's the takeaway. By simply adding another position, you're tripling the amount of risk that you're putting on this shit. Okay? And that's okay. There's nothing wrong with that. Because it works out 50% of the time. It's 50-50. What's the average losing streak? Usually about 3 trades. Sometimes it can be 4, 5, 6, 7, 8, 9, fucking 10 trades in a row. That happens. But the average losing streak is only like 2-3 trades usually. You win every other trade, you lose every other trade. It's all back and forth. So this works long term for me statistically. But I have a fucking issue where if price keeps ripping up past these zones and I have to get re-hedged again, you know, or take a small loss on the sell and then get re-hedged with 2 fucking buys right here, one for the first sell, one for the second sell. Then it goes up to the next zone. And then when it gets to the next zone, I close the buys in profit. It should do the same shit. I add a fucking third sell, you know, praying it's going to bounce. Now look at the fucking risk on this, right? If it goes 200 pips above that zone, you've got 1 unit of risk there, plus another unit of risk there, plus another unit of risk there. So this is 3 units of risk, not to mention the original units of risk that gave. So that's 4, and this is 5 units of risk. So if this fucking invalidates up here, you've now taken your risk exponentially from like 1 unit of risk to now 5, maybe even 6 or 7 units of risk if the invalidation is further. It just gets fucked up if it keeps going. That's exactly what our beautiful pairs GBP JPY did this past week. Now, fortunately, I just stayed hedged the whole time. So I took a little bit of a hit on GJ and then EU because I really thought EU was going to drop and it pushed up. But every time I take a big hit, it's because price trends like fucking crazy. So I figured out a way to do essentially what is the same risk structure, but in a more, let's say, controlled way, a more witty way. And it's very interesting. So I'm going to get right into it here. If you want to like the video, then you're free to do that right now if you feel like doing that. I don't know. And because I literally just teach all this shit to y'all for free. I have courses, paid courses and shit. You don't even have to buy a fucking damn course from me. You learn it all for free right here in this video, unless you click away to go watch a cat video or some shit. Then, be my guest. If you want to learn it, I'm teaching it all right here for free, and I'm giving you the free Telegram channel that I've run for 5 years. It's all fucking here. All you gotta do is pay attention. All right. So here's how the risk structure is that I found. So instead of using hedging, I'll exercise the idea of hedging, but instead it will just be executed with hard stops. But it's still same logic behind hedging, which is essentially just adding 1 unit of risk to the next trading opportunity, and boom shakala. It all works itself out. So let's say we have 2 trading opportunities, right? We have one here. We'll call this AUD CAD on the left. And we've got another trading opportunity. It's a different chart over here. You've seen my super high production quality drawings here of these gray rectangles representing support resistance zones, and the little purple line chart representing price. All right. So over here in AUD CAD, we have a break and retest for a buy. So it just breaks this resistance, comes to support, I buy, right? And then instead of using a pending hedge order, I just fucking enter a buy and have a stop loss below. Okay, cool. All right. So normally what would happen is if this goes and it goes to the invalidation where I would hedge at just under the zone, I would get hedged. It would go to the next zone normally, and I'd close the sell in profit. Then I would add to the buy. I'd add another buy here to the first buy position, hoping, just praying to the Forex gods, really any god that will listen, to be honest, that it just bounces. And then if it bounces there, I'll make a profit, because the 2 buys, the first one will be closed at a loss, and the second one will be closed at a profit, which equals out the loss. So the buys cancel each other out, plus I made profit on the sells going down when I hedge. So it's a profitable outcome. You know what the same fucking thing is if you enter a buy here and it goes down and then it stops you out, and you risk, say, 1 unit of risk for you is $1,000. Say it's $1,000 of risk right there. Well, guess what? I can just go into another buy down here. Same damn thing. Stop loss below the zone. Profit target above the zone. But I can just risk $2,000 because the outcome is still the same if it bounces. If it bounces, then it goes up and I profit $2,000. That means that I make back what I lost on that, which was $1,000, and I make $1,000 profit. So I still come out on 1 hour profit roughly. It's the same shit if you were to hedge. And the same thing would apply if it invalidates, because now I've lost $1,000 there. If this second one invalidates, then I've lost $2,000. So total I've lost $3,000. And then if it comes down here, I can just risk $3,000, which is everything I lost in the last 2. So that way, if the third one loses, I lose $3K. So I'm down $6K on the whole thing. And if it wins, then I make back everything I lost and I break even, which still roughly happens. Like if price gets to the third zone and I have to fucking hedge it again, and it breaks again. It's the same shit as hedging, but just executed with stop losses, because you're essentially adding more to your subsequent bets, anticipating that the win streak will eventually end within 2 to 3 trades. Usually, most often. Don't fucking quote me in the comments saying, oh, you're going to get a 5 trade losing streak sometimes. I know. I'm just saying what is going to happen most of the time. If you absolutely suck at trading, it's a 50-50 win rate. If you're getting lower than a 50-50 win rate, you must really fucking suck, because that's just, you give a chimpanzee a computer and he clicks buy or sell, it's going to go up or down. You're going to be right or wrong. It's going to be a 50-50 if you're using a 1-to-1 risk-to-reward ratio. You get 50-50 win rate, you build up from there. If you can make like a 60% win rate, you're a god. But you don't even need that for this shit to work. So I'm saying the 50-50 win rate, on average, you're going to win every other trade. You're going to lose every other trade. And if you use this risk structure, 50% of the trades you win, the other 50% you lose. Of the ones you lose, the next trades of those, 50% of them you will win. The next trades of those, what's left of what you lose, the 50% of those you win. So it gets from like 50% down to like 25%, to then 12.5%, to then like fucking 6.25% or whatever the hell it is, 6.75%, like 7%. You get to the point where if you lose multiple trades in a row, you're still likely to win a trade at any moment if you truly have a 50% win rate. And then if you have a little bit more of a higher win rate, then it works even better. But even with a 50% win rate, you're likely to make a profit regardless. Like worst case scenario, in most cases, you're usually just going to like break even or make a small profit on a trade. But with this risk structure, it works the same way. But here's what I found prevents all this shit from happening. If it keeps on going into a crazy trend, right? You risk 1K there, you risk 2K there, you risk 3K fucking down here, and you're chasing this shit and it's never fucking coming back, and you're in like 10 hedges if you're using hedging. Here's how I found to prevent that from happening. So you get into a trade and it loses, right? All right, you lost 1K. Well, guess what? On the next tradable opportunity that sets up on another pair, this is a completely different pair, right? So it's just like prices going up, you know, it breaks the zone, retest, you think it's going to go down. On a completely different pair, you take the trade as you normally would, the 1-to-1 risk-reward ratio. And then what you can do right there is you just simply risk, you add 1 unit of risk to this, to whatever you lost in the last. So say you lost $1,000 here. This is AUD CAD. We'll say this is pair over here is a Euro GBP chart on the right. So it's a completely different pair, completely different trading opportunity, completely different context, completely different market environment. Every fucking thing's different. It's just you're spreading out the standard deviation of your wins and losses, and you're randomizing them over a large set of data as time continues. And I'll show you even more about how you can suck even worse at trading and still make it work in just a second. I'll show you, because you don't even have to fucking use support and resistance. I'll show you in a second. So if you risk $2,000 on this, having just lost $1,000 on that, you are now doing the same damn thing you would be if you're hedging, except you're spreading the risk by moving to a different pair and then adding the 1 unit of risk to that opportunity. So that means if this shit keeps on tanking, you don't even know what's going on because you're not trading it anymore. There's two benefits to this. One, it prevents that shit from happening. It prevents the shit where it keeps ripping up like crazy. That's the only thing that would murder my trading system with hedging. That is the only thing. And it would rarely happen, but when it did, I'd lose like fucking 25% to 50% of my account. I have to build it all up again. It takes another like 2, 3, 4 fucking weeks to build it all up. Then I get to my growth target of compounding the account from like 50K to 100K. Everything's all fine and dandy, but it's just more of a pain in the ass and it takes longer. This right here, moving the setup, moving the risk to a different pair on a different setup in a different context in a different market environment, eliminates that. That's the first thing. It just eliminates that shit of it cascading and you trying to chase a fucking falling knife or a rocket ship if it's moving to the upside. And you're trying to counter it with sells like fucking GJ this past week where it kept trying to short the shit and then it kept fucking bouncing up. So that it prevents that. Second thing is currency correlation doesn't even matter at this point because you're randomizing the wins and losses across an entire basket of different trades. So if I take a USD CAD trade and I'm in a buy and I fucking lose it, and I'm also in a sell on USD CHF, well, that'll probably win. So I've lost one trade, I've won another. And then for my next trading opportunity, whatever, it may be some shit on like Euro JPY or AUD CHF or some shit. I'll just double my risk on that. And again, it's not doubling every time. It's just adding 1 unit of R. So if your 1 unit of R in terms of risk is like $1,000 and you lose the first one, well, you add 1,000 to the next trade. Okay, so now you're risking 2,000. That one doesn't work. You add 1,000 to the next trade. Okay, you're 3,000. And then you keep doing that. You don't double it because then it gets exponential and then it's fucking stupid. It's like 1 unit of risk goes to 2, 4, 8, and then after that 16 units of risk on your 5th damn trade. You risked 1 R going into it. Now you're having to risk 16 times that much if you get a 5 trade losing streak. Fuck that. Sometimes you're just going to have a break even or a small loss if you fuck up. And if you get like a 4 or 5 trade win streak, and that's okay. 4 or 5 trade losing streak, and that's okay. There's nothing wrong with that. It happens in hedging too. It's perfectly fine. You don't want to, you're just trying to get to the growth target without blowing the account. So that's the two benefits of this, is that you move to a different pair so it spreads the risk. You avoid the huge market spikes and the huge market drops, and you're not trying to chase them because you're out of the trade. You're thinking fucking clearly. And the other thing is that currency correlation is not a thing. It doesn't fucking matter with this system because you're just randomizing everything. You're saying, all right, well, I lost a trade, so the next tradable opportunity, I'll risk double on that. And then if there's another one after that, it's like, say you lose GBP JPY, then on AUD NZD, you risk, you add 1 unit of risk on that. So you risk 2,000 instead of 1,000. When you get another one after that, Euro NZD, you just risk your regular 1 unit of risk because you're already trying to offset the loss by randomizing and risking on the other one $2,000 of risk. So it spreads the risk out. Some of y'all may be fucking completely lost. I don't know what to say. I don't know how I'm going to teach anyone this. You have to have kind of a brain and a little bit of an experience to do this. If you're brand fucking new, I don't know what to tell you. I have no clue what to tell you. You get some more experience. Trading's hard. It's risky. You're probably going to lose all your money. You shouldn't listen to anything I'm saying. I'm some idiot yelling at you here in a YouTube video, talking with a slightly deep voice into the microphone about what works for me. This is just pure fucking entertainment, shits and giggles purposes only. Now, with that being said, let me actually show you some trades in action and show you how it doesn't even fucking matter what your analysis is for this to work. As long as you're using a 1-to-1 risk-reward ratio and as long as you have the risk structure in place, it doesn't even matter what your analysis is. It doesn't really matter where you enter. Like, none of that shit matters. I'm going to show you some trades I'm in. I'll start here in the Telegram channel. I'm in these trades right now. Let's go fucking look at them. So here's the last thing on this as well. The last thing I'll go into with the modifications to my system. For one, the risk structure, very simple. Instead of hedging, I'm just using stop losses. And then on the next tradable opportunity that sets up, I just add 1 unit of risk when I'm on a losing streak. Eventually, within 2 to 3 trades, in most cases, I'll be out. Every now and then, I'll go to 4 to 5 trade losing streak, and I'll end up going a little bit into the red when I finally get out of it. And that'll be the case that happens most of the time. If I get a 10 trade losing streak, I'll lose like half the account and then just fucking restart over, knowing that that's probably not going to happen most of the time. Because half the outcomes out the gate are profitable. Of the other half of outcomes that lost, half of those become profitable at the very next trade. And then even if I lose 2 times in a row, I still make a profit because the next trade, you make back everything you lost in the last trade plus 1 unit of profit. So the account compounds real quickly. This account I started 2 fucking trading days ago. It's already up to 64 grand. I've made 14 grand in 2 days. It's more money I've made all fucking month trading. I've taken a 50K. The last one was a 50K account. It's down to 15,000 now. I've lost whatever the fuck it is, 35,000 GBP in a matter of a fucking month or 2 months or whatever the fuck it's been. Been stupid, man. But with this, it's like it randomizes everything. All right, here's the last thing. All right, so let's say price comes to a resistance zone and it breaks the resistance and it comes back to test as support. I will buy here at support. Stop loss will go. You don't want to smother this shit, having it so fucking close. Like, give it a little bit of room. So I give it a little bit of room, generally. So the target's still reasonable. Now, if there's a next major zone right there, I'm not going to try to target past it like a fucking dumbass. But if the next major zone's like up here, and price has had a nice bounce at it, that's fine. It's whatever. You can still take that trade. It's all good. So let's say I buy right here and price starts moving into profit. As it starts moving into profit, provided there's still enough upside potential where I think it's really likely to go, guess what I can do? Since it's on the 1 hour and 4 hour and daily, it's actually not so much daily. It's more like 1 hour and 4 hours, the main time frames I use, just because it gives you plenty of trading opportunities and the spreads are still relatively small. This shit will not work if you do it on the 1 minute chart. You go figure out some other shit, moving averages or some, fucking Fibonacci shit or some Bollinger Band bullshit. You go figure something else out. This won't work on the 1 minute because the spreads are just a little bit too high. Now, here's what I can do. If it starts moving into profit, I hold command on my MacBook Pro, and then I click on my trackpad, and then it didn't work. I hold command, click the trackpad, hold command, click the track. There we go. Now it works. So you copy and paste it. Or maybe you can just click, duplicate? Can you click fucking duplicate? Here we go, clone. All right, so you hit clone. All I'll do is then I'll add to the winning trade if it starts moving into profit. Now, how much profit? I don't fucking know. It just all depends on the shit. You can't say 10 pips. You can't say 38.9 pips. You don't know. Once it starts moving into profit to where the momentum's picking up, you could just add to the winning trade. And then after you add to the winning trade, you then move the stop loss for the original trade, which is down here. You move that to break even for the first trade, and you keep the second trade the exact same. So let's look at the 2 outcomes here. Let's look at the 2 potential outcomes. First potential outcome is that if it continues ripping upwards and you get both your targets hit, you made double what you risked on these trades, right? With essentially no additional risk because you added the second trade, moved the stop to break even on the first one. The only shit you risked is whatever the distance was in between your first entry and your second entry. That's all. That's what your risk is. That's literally it. Otherwise, it's the exact same fucking trade. It's literally almost identical, but you're protecting the first one. So if it continues, you make double your money essentially. And this happened to me multiple times in the past 2 days. I'll show you. We had There was the account started. The deposit was $50,000. The fucking broker took the routing fee from me. What the fuck is a routing fee? A $58 routing fee. Fucking taking my fucking 50K, man. Anyway, you'll see there was winners, sometimes doubles. Like AUD CAD, you see this right here? That was $3,000 and this was a $3,000 winner. This is a trade that I added to. I'll show you. I think I got it here in my fucking computer here or something. Yeah, here it is. AUD CAD, that was the first entry. I thought it was going to keep going down. My analysis, it doesn't even fucking matter what the analysis was. It had broken and retested a level right here. This was like a 4 hour fucking support resistance level. It goes further back. You can't see it here in this screenshot, but it goes further back. So I'd started a position there. And then what I did is as it started moving into profit, since it was in the 1 hour, look how small the spreads are. Spreads are small as fuck. It's not going to, if the momentum continues, it's not going to fuck with the trade. So when I added that second sell, I simply moved the stop loss for the first position, which was up here, 8937. You can see how it's no longer there. It's moved it down to break even, and the stop loss for the second position remains the exact same distance as in pips as whatever the first trade stop loss was in pips. So if this was like a 69 pip stop loss or whatever the fuck it was, the second trade will have a 69 pip stop loss as well. Thus, me giving this example here, like this is a 164 pip stop loss. The first one was a 164 pip stop loss. That means you can add the same exact position size and you move the stop to break even and you have almost no additional risk, because what happens if it comes back? If it comes straight back into the zone, okay, you get your fucking first trade stop to break even, but your second trade, you're just in a tiny little drawdown. And you're essentially in the same trade. Because if you zoom out far enough, that entry versus that entry is not that fucking different in the grand scheme of things. In the grand scheme of things, it's really not that big of a deal. You're essentially in the same trade, but with a slightly shittier entry. And that's all. And it's worth the risk, from my opinion. You don't want to do this if it's going against you. But if it starts to work, it's like say you're at the fucking horse races and that's the gate where the horses start running and the horses have to run around like the track like this, right? And they come around in a fucking circle. Super high production quality drawing, I know. Say you get this first fucking horse right here, and this first horse is starting and it's running, and then it's kind of like going kind of fucking slow, and then it's like right here. And then the second horse, there's two horses for some reason and not a bunch of them, but the second horse is coming around and this baby's like fucking rocketing, and it's like the finish line's right there. So if the horse gets there to the finish line, it wins the bet. If this horse is losing, would you fucking add to your bet that horse is going to win the race? I mean, I wouldn't, unless this horse fucking trips and breaks its fucking leg and then dies, and then I might add to that bet there. But if this horse is literally almost to the finish line, what if you could go like back in time and bet $100,000 on that horse, or fucking $1 million on that horse? Or if you're just sitting there and you're watching the race live, you could just look at whoever the betting person at the fucking betting counter is, and you could say, hey, I want to bet an extra $100,000 on that horse. And then they just clicks a button and now your wager's up. And then if the horse like 10 seconds later crosses the finish line first, you win $100,000. What if you could do that in horse races? You can't do that shit. But in trading, you fucking can. In trading, if you get into a trade and it starts going into your favor, you can just simply add to the trade. And then you can protect the first position. So now your first, whatever you risked initially is not at risk. All you remain in is if the first trade's a $3,000 risk here and this one's a $3,000 risk, all you're really risking is an extra $3K minus the little bit of profits on your first trade, which might have been like $500. That's it. That's your only real risk. But if your profit is potentially fucking double, it's the beauty of it. So I'm still down for adding to losing trades if it comes to the next clear zone. But again, like I'm getting stopped out now on the other sides of zones if it goes past. This risk structure just makes it so much better. So not only are you able to profit from outcomes occurring and playing out, but you're also able to profit more from the winning trades when you get a winner. So imagine you have a 50% winner, and then of those trades that win, say 25 to 30 to 35%, or I don't know, however much, say like half of them that you win, they win double what you risked. Holy fucking shit. You have a wildly profitable trading system. So you have a system where you're you're winning half the trades for no reason at all. You can be a complete ape shit retard, and not financial advice, and I'm not guaranteeing you anything. I'm not a financial provider. Everything I'm saying is just pure bullshit. Don't fucking listen to me. Leave this video and quit trading. You're probably going to fail. Most people lose money. All right, all that bullshit aside, even if you're a complete fucking chimpanzee and you're just clicking buy and sell randomly with the blindfold while you're tied up in your basement, you can still get a 50% win rate. Why? Because price goes only one of two directions. It usually doesn't go sideways forever. It goes up or it goes down, right? What are the fucking odds of it? You enter a trade, it is either going to go up or it is going to go down. It is 50-50. Nobody knows where the fuck the market's going to go. Nobody knows jack shit about what the market's going to do. Certainly not you and certainly not me. Maybe, I don't know, institutions, banks, hedge funds, market manipulation. I don't fucking know any of that shit. But I know sure as hell that me, and then if you watching this video, you probably have no fucking clue where the market's going to go. Nobody knows what's going to happen. It's random. It just goes up and down. You're looking at candlesticks on a fucking chart. Okay? You are not God. Neither am I. We're just some idiots just looking at some charts and trying to make a little bit more than we lose. But what you do know is if it does start moving in a profit, then you can make a little bit more in your winners versus what you're going to lose in the losers. And that's the whole point of it. So essentially, yeah. So it's adding to the winners and then adding 1 unit of risk whenever there is a losing streak. All right. Let's look at a few of the trades I'm actually in right now at this exact moment in time. And I'll show you some of my shit here. And I'll also show you, this is the part of the video where I'm going to show you that you don't even have to use technical analysis. You don't even have to use support and resistance, really. All right, so here's a trade that I entered on GBP/JPY. So I looked at this chart, and I'll just turn off all the shit right here. Can we hide all the drawings? Yeah. All right. I looked at this chart, and price was right here when I started looking at this chart, where my little cursor is. It was right here. Now, looking at the past 2 weeks of GJ, for some fucking reason, I had a little hunch that it might be continuing up higher. I don't know why I had that hunch, but if you just look at the fucking chart, maybe you understand why I maybe thought it was going to keep running higher. So I thought that price was going to move from right here up a little bit further. Okay. So what did I do? I entered a buy right there. I put a stop loss just under these previous lows because if price is going to continue an uptrend, it's not going to break past those lows. Because if it breaks past those lows, it might start fucking around, and it is what it is. So I entered a buy, I put a stop loss past those lows. And that started, it came back, it went into drawdown halfway to the stop loss, bounced back up, and then it pushed up and made a higher high. Now, on this green candle, I added a buy position right there. Okay, because I'm in 2 buys right now on this shit right here. You can see somewhere in here. There's GBP/JPY at a buy right there. 182.09, and here's the other buy that I added, right? So there's the first buy, it's in profit. There's the second buy that I added at, a little bit of profit, a little bit around the entry. So I added right there. The worst case scenario that happens if it's still going to go up, but it comes back a little bit first, is I'll just break even on that first one, and then I'll end up making a profit on the second position. And if not, I will break even in the first position, and then I will lose the second position at a $3,000 loss. And that's what my risk structure was. That's how much I'd risked on that trade. That's all fine and dandy. On the next trade, I'll risk $6,000. And if that wins, I'll make back everything I lost here and a little bit of profit. So that's GBP/JPY. CHF/JPY, the same shit. And I'm actually looking to add to this if we come up a little bit more. I'm going to put my stop loss just past that little previous low. And then we'll see if the upwards momentum continues. So there's that. AED/JPY, I'm short right now. I think price is going to come down here short. I understand we're also in an uptrend here. I just feel like the uptrend's fizzled out. We've made a lower low here, a lower high, now a lower low. That's when I got short. I think we could still pull back a little bit before going down. But if we go up, I'll stop out, and that'll be all fine and dandy. And I'm also going to look to add to this position if we come down a little bit lower. What will the second trade look like if I add to this? I'll show you right here. If I add to this trade, if it starts going into profit, I will add a trade right there, a sell, probably right about there, because the spread will be small enough for me to trade. And this stop loss is still 200 pips, so I can use the same exact lot size, same 200 pip risk. It's just now the invalidation is just above the high instead of a little bit past the previous high that it made. So everything still makes sense. Like it still, contextually works fine. USD Canadian dollar. I'm going to sell right now. I just have a weird fucking hunch this thing's going to go down. There's not even really any technical analysis. I think there's like a major daily zone. Yeah, there's a daily zone right here that's broken and retested. But I think it's going to go down because just the direction right now seems that it's going down. So this is what I'm talking about. You don't even need a fucking trading system. You need to look at the chart, have a 1-to-1 risk reward ratio, and have half a brain and get some experience. And after you get some experience seeing this, even you may have a little bit better than a 50-50 win rate. It may be like 55%, 60%, fucking 65 or 70%. Sometimes I have a 90% win rate some weeks, other weeks I don't. I mean, what's my win rate so far this past week? We'll just look at closed trades because I don't know what the fuck is closed trades. How many? Break evens, these were all when I added to trades. So these ones were break even. There's a loss and there's a loss. Euro AUD was a win paired with a loss, so that was break even. So actually all the first 5 orders I paired all fucking break even. Then I had a win. A win. So I've won, what is this, 4 trades? And the other, I broke even on these 4 trading setups because Euro AUD was the same setup, just managed. So what the fuck is the win rate then? I don't even fucking know. I lost 1 trade here. That Euro AUD setup is. See, so the win rate's high in this case. I had all these 4 winners, and then I lost 1, and everything else was break even. So out of 5 trades, I won 4 out of 5, in which they ended up being a profit, and only 1 of them ended up being a net loss. The rest of the shit came out to just be break even. So I don't fucking know what the win rate is. I guess maybe for me right there, I don't know, like how much? Like 80%? I don't know. Some weeks it's going to be 20%, all right? I suck at trading. I'm not that fucking great. I'm just some guy who's figured out how to control risk, make a little bit more than he loses long term, and go outside and take a deep fucking breath on the weekend and try to reallocate my brain to like patience and trading and everything. So CAD JPY, I'm going to buy. I think it's going to go up. I'm going to buy. I'm looking to add if it continues pushing up into this daily resistance zone. And then at this resistance zone, I'm going to look to sell when price gets there. I should probably put an alert here like a big boy. That way I don't forget. All right, sweet. NZD CAD. I'm in a sell right now. I'm actually in 2 sells on this right here. I'm in another sell like a little bit further down here. I don't know exactly where it's at, but it's all right here. You can see here my open trades. I'm in a NZD CAD sell right there. 8136 and 8124, and both of those are in profit. If both of these continue to their targets, it'll be $6,000 on this trade, having maintained the risk at only $3,000 the entire time, because the first trade stop loss is at break even. So if this continues dumping down, almost hit the first target on Friday. This will be good if it can keep going. USD CHF, I entered a sell last week on Friday, and then it immediately went into some drawdown. Now it's still bouncing at the zone and coming back. If it wins, it'll be 3K. If it loses, it'll be a 3K loss. Then the next opportunity I find on another pair, I'll just simply risk I'll risk double on this, what I risked on this. So I'll risk $6,000 on the next setup. GBP USD, I'm in a short position. I think it's going to break this zone. I think we've gone up pretty high, pulled back, tried to continue the uptrend there, but failed right there. Got rejected and came back. And now we're kind of going sideways at the support zone. I just think she's going to break. And I think if she breaks, she's going to come down much further. But my target is a very nice, modest 1-to-1. So that's that. And I'm going to add, if it breaks this zone, I'm going to add to this shit right here. Euro Canadian dollar, I'm in a short position. I'm going to sell. We broke the zone, retested, and started to reject. So this was actually a support resistance trade. It just broke and retested the support resistance zone. I've added a sell. I put my stop above the zone. That way, in case it comes to test along this resistance, I won't get stopped out if it still rejects and then comes down, hopefully, to the support zone. If not, I'll get stopped out. NZD JPY, I'm going to buy. I think this one's pretty obvious too, like the other JPY pairs. I just think it's going to go up. And if not, I'll get stopped out. And that's that. Now, there's also some other trades I've taken this past week that I've closed. I took AUD USD. I thought it would break this zone, so I entered a sell. That was one of the trades that I took that I won. So this right here, AUD USD is that 4-lot sell, 2,900. So I made 3K on that one. GBP AUD, nothing here. I'm waiting to sell this for 4 lots up there at the highs. AUD Canadian dollar, this is the one I entered that I added to as well. So I added like down here as it was breaking the low. So had 2 trades on that both smashed the profit targets. This was just a break and retest of the support resistance zone. Euro GBP, this was another one that I won right here. Yep, for 4.06 lots, I won $3,000 on that. It was just a bounce of resistance. I know, super, super fucking complicated, right? It goes up or down. It bounces at resistance. It bounces at support. It should be very fucking clear. I don't know what I'm doing. This was an opportunity where I used flipping as the risk model to get out of this trade. I entered a sell here at this resistance zone. Whenever price refused to make a new lower low and instead started spiking up, I got hedged right here, but I got hedged into a flip order. So it's where I sold at 4 lots, and that 4 lots wasn't working, so I entered a buy for 8 lots. And then as price kept going up, I closed everything up here at a net break even. So as the buy kept going up for 8 lots, I closed that in whatever it was, like a $2,500 profit. And meanwhile, at that time, this original sell position was also at like a $2,500 loss or whatever the fuck it was. It was a $2,300 loss, and this was a $2,400 profit. So I used flipping as the risk structure because I thought it was likely to go up. And had it come back down here and broken those lows, I would have closed everything at a loss there. And it would have been, a little bit more than 3K. It would have been it probably would have been exactly like 3K. Yeah, so it really wouldn't have been much more risk to get out of that one. Euro USD, I took a buy here. This was one that stopped out. I think this was like the only one that stopped out. Yeah, Euro USD. It was a break and retest of the support zone. And I just bought. I mean, what the fuck is it going to do, right? It's going to go up or down. It came to the zone, I bought, and then it just broke the zone, and I got stopped out. What could I do this week? I could probably get short right here at market open. Potential short position here is probably what I'm going to fucking do as soon as the market opens. Get short right there, have a stop probably up there, and like a target right here, and then just let her go up or down. I don't know what I'm going to do for sure. This uptrend may continue, but I think it's going to keep going down, so I'll probably end up doing that. USD JPY, I think that sums up all my trades. I think you guys get the point of this video. Buying and selling if you think it's going to go up or down, using the risk structure such that you can add to the winners to make a little bit more when you're right, or you can flip yourself out of the losers if you think it's going to go the opposite direction, or in worst case scenario, you just get stopped out. Then on the next trade, you add 1 unit of risk than what you lost in the last trade. So if you take your first trade, you lose it. Okay, in my case, I lose $3,000. The next trade I take on a different pair, that way I'm not getting myself baked into the fucking drops or spikes of like one pair that's just continuing to rip in one direction. If I lose 1 unit of R, which is $3,000 for right now on this account, on the next trade I'll risk $6,000. If that next trade loses, then I will risk $9,000 in the final trade. And if I lose that final trade, and it's okay, because I will lose the $9,000 plus the, what the fuck was it? 6 plus 3. So that's another 9. So I'll lose like a total of like 18 units of R. But that's if I lose like 3 fucking trades in a row, and they all happen to be trades that stop out randomly. But even if that happens, like think of all, like how often is that going to happen? Probably not going to happen very regularly, especially if I can get myself out of these trades like in multiple different ways. So that's the video for y'all. I've made this video. I've showed you all the trades I'm in. I showed you guys literally everything. And, I hope it helps. If you like this video, you don't have to fucking like it or subscribe or do jack shit. But here on my channel, I get straight to the point. I share what I know. I share what works for me. Share what works for the people I've taught over the past 5 years. And I literally share fucking everything here on my free Telegram channel. You can just follow it right now. And then you can go and just, follow whatever I do if you feel like following what I do. I keep it super simple. You're not going to see a bunch of bullshit on my charts ever. It's just typically only support resistance zones. That's all I do. So I'll see you all in the next video. Hope you enjoyed this one. I hope it was useful more than anything. Cheers.